we can ask the questions.
Sure. Let's have the Q&A. Let's have the Q&A now. Come on. Yeah. Let's start with Q&A.
No, actually, about this consumer loans regulatory framework, I have one specific question. So there is this payment directive under which buy now, pay later is operating across to Europe.
Yeah.
And then there are actually activities to amend it and actually to challenge the buy now, pay later to actually become sort of a law.
Exactly.
The question is, what do you see? What is going to come in regulation to be concluded? And what can we expect? Will buy now, pay later be a loan or still a payment?
Actually, this is what I'm talking about. So the Consumer Credit Act imposes that also BNPL will be as a loan. So they will need to be in line with the Consumer Credit Act, which is giving a regulatory, let's say, framework, which is mainly related to consumer protection, which is true. But at least from this perspective, they will be looked like as a loan. And they are explicitly now discussing about that BNPL is kind of a loan. It's not a payment, it's a loan, because there is a third-party provider giving you installments.
But then Klarna is down.
I would not say down, but they will need to have a couple of additional solutions, providing the customer with preliminary information, with calculating the APR and providing it in a digital form on the first page. This is even saying the new Consumer Credit Act. So it's quite interesting that this will be imposed. And if this means they are down or not, I mean, that's, you know how Consumer Credit Act will be a general framework. Yeah? So there will be a couple of things which are regulated, a couple of things which still are flexible, let's call it like this. Yeah?
And I think that's also about what amount of information to be collected, because now when you go for buy now, pay later, you don't need to give a lot of information.
Yes.
It goes for consumer loan. It's a different story.
Exactly, but they will be now, from the Consumer Credit Act perspective, the same. So you would need also to calculate or do a creditworthiness assessment of the client. And if this creditworthiness assessment is negative, then you need to reject the loan. These are very specific things which seem to be at some point in time in the directive. And BNPL will need to be covering this as well.
Your slides are coming.
That's good. Yeah, but very interesting, because this is what I think also, that the gap, at least on this side, will close a little bit between banks and, let me call them alternative providers. Yeah.
It's a clicker.
Thank you. It's all about innovation, right? So, thank you very much again for joining. The good thing is now it's a little bit fuller than it was before, so it's good to start at this point in time now with the regulatory framework. So it's true we covered already part of the questions, but let's have also some of them at the end. So as I said before, let me cover 3 topics. The first one will be explicitly related to this Consumer Credit Act, and then 2 topics which are more related to banks, but there are some, let's say, work to do by the banks, which will widen a little bit again the gap between alternative providers and banks, but still they are important to the banks as such. So these are the 3 topics: the Consumer Credit Act, which is in review, and then macroprudential measures and loan origination monitoring guidelines, which I would like to discuss briefly. So the existing rules, and this is where we actually started the Q&A before. So the current Consumer Credit Act is a paper going back to 2008. 2008, BNPL was not really existing. Not a lot of alternative providers were existing. No crowdfunding was actually existing, at least not on, let's say, our markets. So it's definitely time for a revision. It's time for including also the digital era in the Consumer Credit Act, and giving also the consumers protection if and when they go for a loan with an alternative provider. Although it's easier, it's faster, it's everything, but still consumer needs some protection, and this is where the Consumer Credit Act would like to be part of and say, okay, you're taking a loan also with an alternative provider, they should comply with the directive. So the staff writing and preparing the draft already prepared a very good problem tree saying where are the key problems we need to focus on, or at least the new Consumer Credit Act needs to focus on. And it's really starting with the market development. So we have a lot of digital new providers on the market, and they are fast, they're efficient. I think customer experience is nice, or at least nicer in our country with them as with the banks, because we are still a bit less flexible, let's call it like this. But this is actually also the driver of the problem. So they would like to be fast, they would like to somehow overcome also a lot of regulation, and the Consumer Credit Act would like now to at least stop it to the point that the consumers are protected. So they will not say, of course, you're not allowed to give the loans, but you need to be transparent to the customers, and that's the main thing. Lack of legal clarity, I mean, it will always be lack of legal clarity in some policies and regulations. So this is something which I appreciate the idea to make it more strict, more detailed, but I know there will always be room for interpretation of anything. And there is, of course, also now harmonization between the member states. So it's easy for someone to get maybe a loan also abroad, at least with the new providers, but the Consumer Credit Act is not, even if there would be applied something in Slovenia, it's not protecting me if I'm taking something in, I don't know, Poland or somewhere else. So this is also something where the Consumer Credit Act would like, on the general EU level, somehow to have strict or same and stricter rules for everyone. Where I'm personally also looking at, let's say, the providers in Slovenia, where I see that they will have problems. Cost of the credit product. So I'm not sure how it is with different providers in different countries, but at least what I see is that the costs are always a little bit hidden somewhere. And this is something which the Consumer Credit Act should somehow cover, and they are explicitly, as I said before, writing down that general information needs to be transparently presented in a front page, and they are even saying it needs to be transparently presented in a mobile format. So even if you go to take a loan in a mobile, on the first page you somehow need to have all the information. So this is definitely something where the providers will need to change and adapt and say, okay, I need to give the customer a chance to see everything on one page. We touched it also in the first Q&A, credits granted without assessment and without creditworthiness assessment. So this is also something what I see, that the decisions are very fast. They might be efficient using different algorithms, AI or whatever, but I somehow doubt that there is a thorough assessment of creditworthiness. Of course, here the question will be how this will be exactly defined. What is a credit assessment? What this means? What means a negative output of the credit assessment? So this is something which we will see exactly how it will be written. But I'm assuming that a lot of providers are not really doing it, at least for now, too much. And there is one thing where the Consumer Credit Act and all the drafts and all the discussions they have now is saying as a problem is potential over-indebtedness of the client. This has, of course, something to do as well with credit or creditworthiness assessment, let's say. But if the clients are not protected with them, with something, let's say, they might have a problem of over-indebtedness because they just go to one provider buying furniture, the second provider buying a TV, to the third provider, I don't know what. And then at some point in time, the monthly salary is away. And if nobody's checking it, then we might have a problem. Actually, I see on a daily basis in the process in the bank as well. So you see more and more people, and I'm not talking about 20–30%, I'm talking about a percent maybe. But you see more and more people having these different loans. You see the installments coming from the different providers, which are sometimes 3 months, sometimes 6, sometimes 12 months. But they are getting more and more. And I know, and I see it in other countries where this is, the alternative providers are even more developed than in Slovenia, then you have, of course, 10, 20, 30 times more possibilities to get over-indebted, and that's a problem. Of course, there are also consequences, both for consumers, businesses, for the society, but this, of course, everyone is dealing a little bit differently with this, but the Act as such would like to have at least a general framework which should be there for everyone. I just listed some examples from what I see will be important and where the alternative providers will also need to comply. And I'm saying they will also need to comply because I still think that banks are 99% complying more or less with that, with preliminary information, with the right of withdrawal, with the calculation of APR, so a real calculation of the real APR, forbearance measures and forbearance and arrears. There will be also something written about that, so they need to give the client some possibilities to restructure, etc. So these are the areas I see as very important that they will come into force with the new Credit Act also on alternative providers. For now, what will be excluded from the scope, at least it seems like, direct crowdfunding credit services. So whenever it goes customer to customer, this should be excluded from the Consumer Credit Act because the Credit Act is somehow looking at business to customer. So if there is a crowdfunding credit platform which, when they act as creditor or credit intermediary, they would be inside of this. Yeah? Deferred payments, and that's what we discussed before. If it's a deferred payment where there is no third party offering credit, then it would be excluded from the scope, in case it's also free of interest. And it's written very clearly that they should distinguish this with the buy now pay later schemes, which are included within the scope of the proposal. So they will be part of it. There is a third party which somehow provides the credit, and from this perspective they will be looked like a loan, and they will need to comply with the Consumer Credit Act as well. Deferred debit cards, which I would personally also agree, and leasing agreements where there is no obligation at the end or possibility to even buy the car, let's say, they would be also excluded from the scope because this would be more, let's say, renting agreements, but normal, let's call it normal leasing, would be also included in the scope of the Credit Act. There were also options for each member state to a little bit distinguish between the different practices. So there is one thing, the Consumer Credit Act is saying, okay, everything starts with 200 euros. The proposal is also every loan up to 150,000 euros. And the member states will have a possibility to say also if it's less than 200 euros. So this 200 euros is some kind of, let's say, interesting boundary. It might make sense, it might not make sense in some countries for some providers, but it might be interesting also within the different schemes of BNPL, etc. What are other important changes, so which I mentioned before already? Refusal of credit in case of a negative creditworthiness assessment. Again, the question would be, what is a creditworthiness assessment from the legal act perspective? Of course, every bank has it prescribed by their own, but making it the same for the whole EU will be somehow, I would say, impossible. temporal delimitation of the right of withdrawal. So if the provider is not informed the right time with his APR, etc., then the client would have the possibility also later on to say, okay, I'm canceling the contract. And early repayment possibilities, which should be there, and the client should be somehow, let's say, informed also in front. What are the costs? What are the possibilities, etc. So this is in general the Consumer Credit Act. I know it will have a lot of pages and a lot of details, but as a broad summary, it's something which will close the gap at least a little bit between the banks and the alternative providers. Covering very quickly the two topics I mentioned, because they are from regulatory perspective extremely important for the banks. At this time, not for the alternative providers, at least for now, are macroprudential measures. I'm not 100% sure which countries have them by their local authorities. We are one of the examples which have a very, let's say, strict macroprudential rules, which is somehow imposed by the local regulator. So the local regulator says we are limiting the amount, the maturity, and also some other details of how you give the consumer loans to the client. So it's limited up to 10 years, but only 10 or 15% can get 10 years. Everyone needs to get 8 years or less. The idea behind is to somehow save the financial stability of the country. I think it might be also in other countries more and more popular that the local regulator will take some steps in order to say, okay, you are just over-indebting your clients, then you need to stop a little bit, or not over-indebting anymore the clients, you need to give the loan only to these people who have this minimum legal salary, this maximum DTI, this maximum loan to value, etc., etc. So this is an example. There are, let's say, couple of things which are important, as I said, debt to income, loan to value, which are a maximum. There are always some possibilities to get also 10% outside of this, but this is somehow especially for the banks. So again, this is somehow opening the door for the alternative providers, even for leasing companies who are giving consumer loans, who don't have this rule. So therefore we have quite a problem that it's shifting a little bit to alternative providers from banks, which I would not say now what is the best thing or the worst. And loan monitoring, loan origination monitoring guidelines. This you might also know very well, at least the ones working in a bank. It started everything already also 2 years ago. It was then postponed a little bit. But the guidelines are also giving us quite a lot of things to do. So again, widening the gap to the alternative providers who don't really need to comply with them, to prepare a lot of monitoring, to prepare the internal governance around that. Don't need to fully comply with the creditworthiness assessment based on the guidelines, who don't need to go through all the details of valuation of collateral, and especially don't need to deal too much with ESG, which we discussed just before, which will be a very important thing for the banks, and where the banks will also spend quite a lot of resources in the next years. Let's say the key impacted areas on this part of the regulation: ESG, as I said, technology-enabled innovations, which is something the banks are of course also doing, AML, and also let's say risk-based pricing, which is especially for us something which is not really common yet in the market, but it will widespread in the future. The timeline, as I said, It somehow passed already in terms of when we should be ready with that. We had already first regulatory inspections, so the regulators already coming and looking if everything is done. And there is some, let's say, lead time still to where there are gaps, to address the gaps, prepare everything and be compliant at least in 2024. And again, be ready to be, let's say, fully compliant with them where the alternative providers don't really need to be in that detail. So to sum it all up, there is one topic which is closing the gap between alternative providers, and I hope the Consumer Credit Act will come in soon, so we will have a little bit more competition again on the market. But there are of course other things which are widening the gap again, and I hope that also this will somehow close in the future, so we will be very much in line both together, so the competition will also be as it should be, and not that the banks are fully out of the market because of regulation only. I'll stop here, and I'll take any additional questions.
Can you please, it's open? Yeah. Can you please tell us how do you see the evolution of consumer loans in Slovenia in the following months?
Let me go first back. So in the last 2-3 years where the mortgage loans have been rather cheap, let's call it like this, and the credits were available, the consumer loans went a little bit down in terms of volumes, also imposed by macroprudential measures. Now, when we have the shift in interest rates, the consumer loans